Bitcoin just broke $95,000, but this is the real risk nobody is talking about. Bitcoin just crossed $95,000, and for a lot of people that feels like confirmation that everything is fine again. The chart looks strong, sentiment is improving, and optimism is spreading fast. But while most investors are focused on price, there is a much bigger risk quietly building underneath this rally, and ignoring it could be far more damaging than missing the next move up. Before we continue, this video is for educational purposes only. This is not financial advice. Always do your own research before making any financial decisions. On the surface, this Bitcoin rally makes sense. Inflation data has eased, markets are feeling more comfortable taking risk again, and traders are repositioning after weeks of uncertainty. Money is flowing back into speculative assets, and Bitcoin is one of the biggest beneficiaries of that shift. When conditions improve, Bitcoin tends to move fast, and that is exactly what we are seeing now. But price action alone never tells the full story, especially in a market like crypto. To understand what is really happening, you have to look at how this move is being built, not just how high the price has gone. A large part of the recent momentum is coming from derivatives markets. Futures and options traders are increasing exposure, betting that Bitcoin has further upside. Derivatives matter because they amplify everything. They amplify gains, but they also amplify losses. When positioning becomes crowded on one side, the market becomes fragile. It can keep moving higher, but the margin for error gets smaller with every step. This is where rallies often feel safest right before they become dangerous. At the same time, there is another issue growing in the background that rarely gets attention during bullish periods. Over the last year, an estimated $17 billion worth of Bitcoin was stolen through hacks, scams, and fraud. Not lost because of volatility. Not sold in panic. Completely gone. This is one of the largest silent drains on the crypto ecosystem, and it matters far more than most people realize. As Bitcoin rises, new investors enter the market. Many of them are inexperienced, emotional, and chasing momentum. That makes them ideal targets. Scams are no longer limited to obvious fake emails or poorly written messages. They are increasingly sophisticated, often using AI to impersonate real platforms, real people, and real opportunities. The higher Bitcoin goes, the more convincing these traps become. This does not just hurt individuals. It affects trust across the entire market. When losses pile up through fraud, confidence weakens. When confidence weakens, liquidity dries up faster during sell-offs. That makes downturns sharper and more chaotic than people expect. Here is the uncomfortable part that most investors do not want to hear. Bitcoin can be going up in price while becoming riskier at the same time. Rising prices attract attention. Attention attracts new money. New money attracts bad actors. Bad actors create losses. Losses create fear. Fear increases volatility. That cycle builds quietly and only becomes visible when sentiment shifts suddenly. This is why some of the most violent moves in Bitcoin history have happened after periods of strong optimism, not during obvious fear. Supporters of Bitcoin argue that this time is different. They point to increased adoption, institutional participation, and a more mature market structure. And they are not wrong about those improvements. The ecosystem today is more developed than it was years ago. But skeptics see something else. They see leverage rising again. They see speculative behavior returning. They see security risks growing alongside price. And they see sentiment becoming increasingly confident, which historically has not been a sign of reduced risk. Both views can be true at the same time, and that is exactly why this moment deserves more caution than excitement. If you are holding Bitcoin or considering entering here, there are a few things that matter more than daily price targets. Watch how price moves relative to volume. Sharp gains without strong participation often struggle to hold. Pay attention to headlines around regulation and security, because those shocks can move markets faster than fundamentals. And most importantly, pay attention to behavior, both your own and the market's. When everyone sounds certain, risk is usually increasing, not disappearing. The biggest mistake investors make is assuming that risk fades when price rises. It does not. It just becomes harder to see. Bitcoin breaking $95,000 is impressive, but the more important question is not how high it can go next. It is how resilient this market really is if confidence cracks. Understanding that difference is what separates people who survive long-term from those who get caught reacting too late. If this breakdown helped you think more clearly about Bitcoin and the risks beneath the surface, like the video, subscribe for more market analysis like this, and let me know in the comments how you are approaching Bitcoin right now.